SmartDex is the first DEX with a real solution to impermanent loss. SmartDex is transforming the DeFi landscape, catering to liquidity providers and smart traders who want to benefit from low fees. Farm DeFi highest APRs and trade effortlessly on SmartDex.io.
Really, I'm really hoping that this has cured the beeping noise, but we still don't know what it is, right? So full disclosure, we don't know what the beeping noise is, but hopefully it is fixed. So okay, BT, yeah, like you're frozen. Oh no, Kelly, we can't have you frozen. Hang on, I think it might be something my end actually. Now we can hear you. Brilliant. Yeah, I don't know what's gone on. Just the streaming software had just gone a little bit funky on us. Let me just reshare my screen. Just come from a trading session with a client of mine, so you will just have to excuse the mess. But there was something that we covered in here that I just really wanted to kind of look at with you guys this morning. So I think it was in one of these. So let's just have a look. But how are we doing anyway, guys? It's brilliant to see you as always. Thank you as always for your endless patience as well, be it the bleeps on the live stream or some kind of weird technical issues that seem to literally follow me around wherever I go. It is just really weird as well because these things do genuinely seem to follow me. So let's see. I think it might have been here, right? So something that I wanted for us to look at together today. It doesn't really matter where it is, but kind of let me just make this a full screen. No beep so far. That's a massive win, that is. So let me just have a quick look. So I wanted to look at how we engage with high time frames, right? And then how we can kind of frame trades around that. And I wanted to kind of touch upon and look at in a very brief kind of way, because I'm far from like a real kind of industry expert on this. There's definitely ICT students out there that are better than that than me. Is looking at the idea of these kind of market maker models, right? And this is the idea that we have a reversal, we have accumulation, this is in a bullish trend, and then we have a reversal, and then we have distribution, sometimes redistribution, and then again another reversal, right? So I had a really kind of clean setup here that I wanted to look at with you guys that we were just literally covering on the mentoring show. But I think, as is typical, these things disappear as quickly as they come. But the great thing about that is, and what we do like to do on our shows is kind of stay with recency, right? So to save any kind of cherry picking, let me show you what it is that I'm just blathering on about, right? So with any kind of setup, Nit, my man, absolutely nothing, mate. Typical standard BC technical issues for the first couple of minutes. And we are missing the beeps. I know. I missed them on behalf of all of you. God, it was weird hearing that on the stream. It literally sounded like I had a dishwasher behind me or something. But yeah, I really don't know. So anyway, let's crack on, because I'm sure you've all got some alts and bits and pieces that you want to look at. Guys, before we start the stream, is there anything that you guys really want me to cover? Is there anything that's really kind of in your minds that you're really, really struggling with, that you would just really, really love to cover, because I'd really like to do that for you guys as well. I've got some things in mind for today, especially looking at how we're kind of, focusing on the daily, decanting down to the hourly, to look for setups. But I don't know if there's anything that's really kind of bugging you guys in your trading, or any kind of areas that you really would like me to focus on today, whether it be things like order flow, or, how we're using order flow to ascertain bias. PD arrays, one of my favourite things in the world. And I've already got bits on the chart, Kelly, so you are massively, absolutely in play with that. So, I mean, you couldn't have actually said anything better, Kelly, to be honest. So let me do this really quickly, right? One thing that I just really, really can't stress enough is how important it is to have our high time frame view, right? Why? Because we need to look at where price is reaching for. So I'm always asking myself three things, right? And actually, do you know what? Let's do what all these other cool traders do that I always seem to mess up. Thank you. I just got a tea delivery, which is awesome. So let me do what all these other cool traders do that I always seem to mess up. We're going to look for point number one, yeah? Where is price currently, right? Number two, where is price to expand to, right? And number three, and this is so key, where is price delivering from? Yeah? So we're just going to leave them there as a little reminder for us. Can you guys see that? Or I can make them even bigger, can't I? Hang on. 20 or something. Make them really obtrusive. Yeah? So does that make sense? So, oh my God, GOT, without a shadow of a doubt, I will absolutely cover that. Huge part of trade. And in fact, do you know what I'm going to do today is we're going to focus on this. And I need to write this down. So 1 second. We are going to focus on this, right? We're going to look at PD arrays. And we're just going to make this a real education-heavy session, yeah? We'll make some time at the end, like 15, 20 minutes, if people really want to run through some charts. But I think this is... There he is, Yusuf. Gal today, is it, mate? All right, well, we'll make time at the end for you, my friend. GAL. Just remind me. I've got it written down, Yusuf. And then intermediate-term highs. Intermediate-term lows. Now, I will teach you how I use these, my visions on it. I had the pleasure of training under ICT for many years. I also had the pleasure of training under some unbelievable traders. So my concepts are kind of a bit of a merge of some different things. So what I would always say is always go to the source, the creator of the content. Really do put your time and your effort into studying the ICT models and the methods. It is long. It is a little bit convoluted, but it really, really helps. But what I'll try and do is kind of try and break these things down for you in more kind of digestible chunks. I'm a simple creature. What I typically do is I try and find the things that really speak to me, and then I try to break them down to the absolute most individual soul parts that I can, so I can really focus on it, right? So first of all, we're going to look at our PD arrays. Hey, thanks, Erica. That's right. I'm sure the likes will get up. Smash the likes if you enjoy the stream, guys. If you don't feel compelled. And if you do have any feedback, critical or otherwise, please do either pop it in the comments or drop me a message. At the end of the day, I want to make these streams important for you, because I really, really do get a kick out of teaching what I've learned, right? I don't do it for any other reason. Nobody pays me to do it. I just really enjoy it. And I was very fortunate to have some really good people in the industry help me when I started out, and it made all the difference. Not saying that I put myself in their shoes, or certainly in their league, but hopefully the mistakes I've made and things that I've gone through can help you guys out. So, blabbering aside, let's look at this, yeah? This one we've got here, right? Where is price currently? Where's price looking to expand to? Where's price delivering from, right? So let's look at this beautiful example here. Yeah, so this is where we are on the daily chart. So where is price currently? Price is currently residing in this fair value gap, right? If we want to, we can do this as well. And we can make a note of where the equilibrium is. Okay, so the equilibrium, right, which is just the midline of it, you just use a Fibonacci to split the box, and then we're here. And what we're saying is, at the moment, we're deep within this fair value gap, bullish fair value gap, right? So we're either looking for price to do one of two things, yeah? Price is either when we're looking at, so okay, let me put this in. So when we're looking at price, we are either one, reaching for liquidity above an old high or below an old low, or looking to rebalance a fair value gap. So we're going to slap that in there next to us, right? So where is price currently? Where's price looking to expand to? And where's price delivering from? Now we need to answer those questions. Price is currently within this fair value gap, right? Now, what I'm interested in here, and this is where I think a lot of people get confused, people would say, okay, well, we're currently delivering from this fair value gap, right? And you would be right. However, we actually need to pay much more respect to what side of the curve that we're on, Now, that just links to the idea that we're talking about sell side or buy side, right? So are we a seller in the current market conditions or are we a buyer? Now, on a daily scale, we have to remain bearish. Why? Because we're in a clear downtrend and we're respecting bearish arrays, So what does that mean? We've broken down here. We leave this bearish fair value gap on the daily. What do we expect? When price comes down here, remember, we're looking for price to take out liquidity below an old low or above an old high. Because we're moving lower, we're looking for old lows. See this one here? Let me just make that a little bit bigger so you guys can see that clearly. And we'll make it red as well. Old low. What happened? Price took liquidity below that. So now where do we expect price to go? Price is here, taking an old low. So it's either reaching for liquidity above an old high or below an old low, or rebalancing an FVG. Oh, no worries, Craigie boy. Have a good one, my friend. If you got any questions, mate, just drop me a message. So run an old low here, right? We've taken that liquidity. Now, the expectation here isn't that we're necessarily just going to reverse and go to the moon, but the chances are that that liquidity is being run for a reason and we're going to see some kind of reaction. So where do we expect price to go to? This is where we're looking for our arrays, right? We're then looking for price to rebalance this fair value gap, and then potentially move lower. So why have I got this line marked up all the way down here? And why am I bearish? Well, because we're in a sell model, right? Yes, we're in a bullish fair value gap, but we don't know if that's going to reverse price. If it does, great. We can use this as our catalyst and then we can look to get involved higher up. What we would do is we need to put parameters in place that give us a better indication. Just because we're in the middle of an FVG, I have to respect the fact that price is bearish, right? I'm not expecting to long here. If I'm looking to long, where am I looking to long to, right? I'd be looking to long to this. See this volume imbalance? Sorry, it always changes it to vid. B. Volume imbalance, right? What's this? See the gap here? Right? This is our volume imbalance. So if I just make that a bit darker. Our expectation is that if price is correcting, it's going to come into here, right? Now, what else do I need to be aware of here? When can I actually say to myself, okay, I can actually start to think bullish now? I really actually think that we're going to do it. Well, I either need to see order flow change or market structure. If I'm waiting for a shift in market structure, then currently I need to wait for this high. So I would need to see price do this, then come down, set a higher low, and then only on the break of this high are we technically then stepping back into daily bullish structure, right? However, the other thing that I can do when I'm using this, remember that we're going to decant this down onto lower time frames in terms of looking for actionable setups, is that this volume imbalance here, if we got a daily close above this, do it in green to show that it's our bullish candle, then I can then start to look higher and say, okay, well, where's price probably drawing into here? Well, this bearish order block, which we'll just do in red just to signify that it's bearish. It's come out a little bit pink, but we don't mind that. And then the equilibrium. I'd be saying to myself, well, if we close above this here, right, which is showing strength because we violated, our array, yeah, which is our volume imbalance. So an array is an order block, a fair value gap, a volume imbalance, right? So once we've done that, then I'm saying, okay, well, maybe we pull into this. If, however, I'm not saying we would do this all on this candle, but if we start closing above this order block, then where am I looking, right? What have we done? We've changed the state of delivery. We're now looking for higher prices. So my target then becomes this bearish order block. And what it does is it gives me this whole move here on a lower time frame to get involved. Yeah. While that doesn't seem like a lot on a daily chart, yeah, you're talking about 335 pips, 350 points. This is on a thing, by the way, guys, because we're on an FX pair, right? So it's different how it weighs out to crypto. But believe me, that's a lot of points. If you're scalping, you can do 8, 10, 15 points scalping, right? So there's plenty of room in there. So does that make sense? That's what we're looking at in terms of arrays, in terms of how price is moving. That's what we're asking ourselves. So for me at the moment, I can't be looking for bullish setups here. Because first of all, we're deep in this, in the volume imbalance, right? And my expectation currently is because we're delivering bearish, right? What have we done, right? Came down to here, set this fair value gap, we dropped into here, right? We then come up, rebalanced a bearish fair value gap here. What have we then done? We've then dropped again, and we're now currently rebalancing this volume imbalance, meaning that my expectation is still for lower prices, right? If we got, as we just described, and we start getting a strong close above here, we can look for price to come into this order block. We do want to be aware of this order block. This is currently suppressing price. We can see from the high to the low, yeah, price is coming in, finding rejection. I'd really want to see us close above this here before then expecting us to come into here. Once this and this are violated, then we can say, okay, well, look, we're not as concerned then because we've regained market structure here. So our expectation is to respect, yeah, the arrays on the buy side of the curve, right? So this is a buy side, yeah, this is a sell side. So here on the buy side, what happens? We inverse, we come into this order block, we set the order block, we close above it, yeah? What does price then do? Price is then always looking to engage with an array, yeah? So it's either looking to go for an old high or an old low, looking to rebalance a fair value gap, but within that, we have to consider our order blocks. So what do? Close above this order block here. What are we then doing? Coming to this order block here, right? So look, close above it here. We then look for price to draw down and come up into here. Ultimately, we see a rejection here, but we're not as concerned about that. We don't think the market's just going to reverse here. Why? Because we're respecting the buyer side. What we're looking for is price to draw in to this order block, and look how well it respects it. Look at the bodies of those candles, right? So price comes in. We look in here for our triggers. We look for price to move away. We then get confirmation that this order block is set. So our last down candle here. It is set when we close above it here. Then look how it acts as support, right? Price comes in. Where's our next target? Remember, over here, reaching for liquidity above an old high or below an old low. We're in a buy program, so we're just looking for the old highs. We're looking for price to chase down these highs, right? Whilst respecting our arrays. Now, this order block is respected. At what point is our next order block valid, right? So we need a down close candle closed above. So we're now looking at this one. I'm going to draw this one across to here, and I'll show you as to why. I'm just going to get rid of this, guys, because you understand market structure. So order block, close above it. What's our expectation now that we're going to chase down this high? Yakuza Kana, my friend, you're not late at all, mate. Maybe by a few minutes, but we'll let you off. Now, everything we're doing is on here, mate. We're looking for three critical things. Where is price currently? Where's price looking to expand to? Where is price delivering from? All right. Then price, when we're talking about price, our expectation is it's reaching for an old high or an old low to attack that liquidity, yeah, or it's looking to rebalance a fair value gap. Within that, we then make an account for our order blocks, right, which is what we're much more looking in this case for price to come up, support, breaks away, support here, yeah. Find support here, we close above this bullish order block, which is a bearish candle. So this one here, when we close above it with this candle, our expectation is that then this high and then this high get chased down. right? Now, the reason I wanted to draw this across is because we look at our inverse fair value gaps, which I know I bang on about quite a lot. I do find them very useful, especially on the lower time frames, right? Is this order block here, should be supporting price. When we take out this high, we close below it here, this is a sign of weakness. So now we're looking bearish and we're starting to look for the clear and obvious lows that price can attack. Close below this, meaning that basically we invert this order block. And we're just going to do that in a bright purpley color or pink to show that now we're looking for lower prices. So what? Price to draw in, sell lower. Daily candle, remember, if we're bearish, we want to see the daily candle open, trade higher, expand lower, and then close. Day opens, expands higher, draws lower, closes. Day opens, expands higher, draws lower. What does it do? Engages with a key liquidity level. All of a sudden, we then see a difference in price. Price opens, expands higher, draws, and closes. But we don't switch bullish here, right? We're still only interested in bearish setups because we're just engaging with a bearish PD array or a bearish array. This is our daily fair value gap, right? See the gap between that wick and that wick? So then we're still saying to ourselves, right, we now still want to see, we're still in a sell program. We want to see the price, the day open, trade higher, which is that little wick, expand lower, and then close. Then here we get a gap, right? So then that void, which confirms when this candle closes, we draw that in. Let me just do that in a different color so it stands out a bit more. We draw that in as our void. Candle closes here. What do we expect? Price opens, trades higher, and comes lower. So until these are violated, we are always respecting those arrays. Does that make sense? Or have I just really gone around the houses with that? Because I'm sure it should sound a lot more simple than I'm explaining it. Is it making sense, guys? We'll go over a few more examples before we kind of reach down and then look at our intermediate term highs and lows and how we can use those. So while you guys are definitely either scratching your heads or trying to work out how you can politely tell me that that was nonsense, it does make perfect sense. All right, lovely. Thank you, Erica. So let's just take those rules and let's just apply it on a random point of the chart. We're going to stop here. Everybody happy with that? Yeah? Just to show you that we're not cherry picking anything. Right, so we're going to zoom out. Now, just to save my computer from just an absolute implosion, right? Oh, no, it'd be okay. Take a look at our internal liquidity here. Actually, external probably because of the trading range, but we won't go into semantics. Now we're going to pull together everything that we've just discussed, right? And we're only going to focus on the buy side of the curve. So, and you can practice this as well. Remember, like I said, mulling dash clear, lovely. Slowly clear, super awesome. All right, I'm going to go through it again just quickly, right? So on our theory that price is either traveling to rebalance a fair value gap or looking for liquidity above an old high or an old low, And then we're going to look to our order blocks to support price, all right? So we're just going to start at this point here. Price has come in. Why at this point? Because we've purged a key level. This is a higher time frame liquidity level. This is where we're expecting some kind of reaction, right? So for me here, I'm expecting price to reach up into this fair value gap, which we'll do in red to show it's bearish. Why? We've left this inefficiency and we've run a key level. Whenever we run a key level, and I'll run over this shortly if we've got time, in terms of session liquidity, we need to remember this works on any time frame. Price is fractal, right? You will see these things repeat on a 1 minute chart as you will see on a daily and a weekly. So, everybody with me, we're in a bearish state of delivery. We're looking for lower prices. The reason we're expecting some kind of reaction here is because we have a higher level and we expect there to be stop losses below. So when those stop losses are engaged, these are all buy orders, people, because they were selling here, so they need to, so basically, buyers here, these are sell orders, So what do you need to do if you want to buy? You need a lot of sellers. So all your sellers below here are a really, really big target for major accounts that want to get their positions filled, So what can we do to mitigate that? Well, we say to ourselves, first of all, we're not changing, right? We are literally just doing this at the moment, right? So we don't want to change here. When do we want to change? Well, we want to change when we change the state of delivery, right? But how can we preempt that? Yeah? How can we preempt that change? And what if we're wrong? Yeah? Doesn't matter. All we do is we trade the system until it breaks. There's nothing bullish about this. Yeah? You should just be looking for lower prices. So let's go back to our theory. Prices run this low, right? Perfect. We expect a reaction. Where do we expect that reaction to take place? Well, in an inefficiency, our fair value gap. What happens here? Price engages with our fair value gap in a nice salmon colour, which is just to show the fact that it's bearish. Have I got a more aggressive red actually? Right, still salmon. Then where's our expectation? Where's price going to look for? Remember what we said? Old lows, right? We're in a bearish state of delivery. We're expecting FVGs to be engaged with, and then once the FVG is engaged with, one of two things is going to happen. If we get a bullish close above this, yeah, then I'm expecting a deeper retracement into here and possibly a reversal higher, right? However, we don't get that. We get a rejection, and we would monitor that on the lower time frames, yeah? And then where are we targeting? These lows. And what else are these lows? They're equal lows, engineered liquidity, right? So, fine, we're still bearish. And you're like, yeah, okay, fine, BC. I know we're freaking bearish, right? I can work out a trend and I can look to trade that trend on the way down. It's how the hell I know when the trend is changing in the other direction that makes most sense to me. And I hear your pain, right? Bearish fair value gap. Now, just for a moment, let's take that out of the picture. Yeah, and let's look at this. What's price doing here? Yeah, we form this fair value gap. That's already on our chart. We know this is our high time frame level here. Yeah, and we also know that this is a swing low when this candle closes. Why? Because it's flanked by two higher lows. So now we're saying, okay, swing low's been set. Our expectation for price to draw into here and search out lower. Yeah, so we wait. Yeah. I'm not going to go into it in this lesson, but you can counter trend trade this higher because you know that's your draw on liquidity. If you're wrong, right? You just have to know it washes out in the data. Then when we get to here, yeah, our expectations to go short. So we look for our short setups on the lower time frames. We get that. Price then runs down to our target. Do we expect it to go any lower? No, right? Good question, Nit. Would I have entered on the first interaction of the fair value gap? Absolutely not, right? So within here, I would need to be looking for what's known as I would look for what's known as a confirmation setup. Okay, and we're going to go back to that in a second, and I'll take a look at this exact one for you. All right, but that's a really, really good question. Some people do. Some people are happily to just buy at key levels, sell at key levels. That's fine. Just not my strategy. I'm not saying that it doesn't work. It's just not something that I test. I like to see confirmation. Yeah. So I've looked for my low time frame. In fact, let's just add that on there. Low time frame confirmation setup, right? And then we've shorted down to here. Now, when we've got to here, right, let's look at how things start to change. First of all, we've set an inside bar pattern. We're not going to cover that at the moment, but they're often significant. Now, what were we looking for this fair value gap to do? Anybody? When we closed, when we took out this low over here, our expectations for price to rebalance a fair value gap and then look for liquidity lower. Yeah? So it would make sense, right, that we're looking for the same thing here. Yeah? For price to move lower, rebalance this fair value gap and go lower. But we don't get it, right? What's different about this? Yeah? We had this big, strong close above here, right? What did we leave when we had that strong close through this? So we violated this now. This candle's closed. So from this day onwards, I'm going to do it with my line just so you can see. We are only expecting bullish price action. Yeah? Why bullish price action? Because we violated this. This should have been delivering us bearish price action. This is an extremely bullish candle. Violates this. Now, when this candle closes, what do we leave? You move it aside again. See this wick here? Just going to draw it in before we trace across to the right. We're going to do this in bright green because this is our bullish fair value gap. I'm just going to move this back across to show us we're bullish from here. So remember what we're saying, yeah? We're expecting price to attack a high. What do we have here? Price takes out that high. So then what are we looking for price to do? Rebalance the fair value gap, right? So do we see how we then look at the change in the state of delivery? So, okay, so how from here do we know where we're going? Yeah? We traded through it with displacement using a fair value. Yes, GOT, that's effing exactly what we did. The fair value gaps, the displacement, the market dynamics, for me, what tell you when they're stepping in. The reason we leave these fair value gaps is because there's a lack of order pairing. Why? Because so many big bloody orders have come in here that the market just can't pair them quick enough. We leave these inefficiencies, same as on the way down, right? That's why when we use these inverse fair value gaps, yeah, and that's why this one here would then, I do it this way anyway, change to purple to show show us it's an inversion, shows a sign of strength in the opposite direction. We then confirm that strength by dropping down onto here, right? Waiting for price to re-engage, which we would have done here as well, right? We can just see, just because I've got this line above it, which I'll get rid of now, we can see how price dipped below this low into the fair value gap. So what's it done? Two really key things. One, it swept the prior day's low. That's massive, right? And it's dipped into this fair value gap. So then where does our target become? This high, yeah? Then when price comes back down here, we're looking at it on the lower time frames. We just look to repeat this on the lower time frames, yeah? These kind of patterns. Then price dips down into here, right? Finds support, continues higher, right? Remember, we're in bullish state of delivery now. We're just looking for price, yeah, to chase higher and higher prices. And then it takes out this higher. Then what happens? It comes to sweep all of this beautiful liquidity. This is known as LRLR, low resistance liquidity run. See how these highs sweep each other, taking the liquidity? This runs down because none of these have been tapped. So this is think of it as a fuel depot, dipping into here, gobbling up all these orders, using it to fill major players' orders, and then we fire away. So what do we then do to give us conviction that price is moving higher? Yeah. Remember, we always want to be looking left, guys. Yeah. Where's our key highs and lows? Yeah. We've got the ones on this side here, but there's still ones over here. Like I like the look of this one and this one because they're kind of relative equal highs. But let me click on the bloody thing, trading view. Thank you. Right. So again, we've got a clear target up here. What else can we use? Right, remember what we were talking about, order blocks. So when this order block is set, this down candle, we're waiting for it to be closed above, which it did here, meaning that we can then trade this up to these highs. However, we also set this down closed candle as an order block. So we close above it here. What does this do? Give us conviction to trade at least to this high. Yeah, and then ultimately to our target here. Now we're on the buy side of the curve. All we're looking for is for our arrays. Yeah, and this is lovely Kelly that brought this to our attention. All we're looking for is for our arrays to support price. Bullish order block, confirmed when price closes above. The very next candle leaves a fair value gap, a bullish fair value gap, which we then look to trade higher. Where to? Originally into these highs, and then ultimately up to fill these inefficiencies, right? But what happens here is price breaks down, yeah? And we actually get a little bit of an indication of that here with our inverse fair value gap. So when price closes below it here, we expect price to take out this low. Now remember what we were saying, price is reaching for liquidity below an old low or to rebalance an inefficiency is in a fair value gap. So price draws down here. Why are we not getting bearish? Well, we're still within this fair value gap, right? And actually, again, if we draw this across as a mean threshold, look how well respected the bodies are. Okay? So as we're in here, we're saying, okay, we can hunt some long setups here, or, yeah, we can wait for some extra confirmation. Where's our bullish order block? Is the down close candle. Close above it here. Yeah? And fine, we're drawing up into this fair value gap, which we would be aware of. But at the moment, in terms of market structure, we still haven't broken down, have we? So you can either be cautious, you can trade it off of that. I certainly would. We draw back into this order block and pump higher. Or if you want some extra conviction, you can wait for the inverse fair value gap. Price has taken out these highs. Remember, we've taken a high, so now what are we looking for? We're looking for a fair value gap for price to draw into and then go higher. There's no secret here that price draws in first of all, then where does it attack? This high. Draws back into this again, but not just into this at this point, because we've closed above this bullish order block, right? Closed above it here. So now when price draws into this order block, we're expecting to find long setups here, targeting where? First of all, this high, and then ultimately this high over here. Yeah? Now, we then go into a bearish state of delivery here. Why? And again, remember, these clear and obvious old highs are key and lows. So price has now taken this higher, right? So what's our expectation? That price is going to find support within this order block. Which originally supposed to be green. What does it do? Closes below it, right? We then set this bearish fair value gap through it, balanced price range. We now expect price to deliver lower, targeting equal lows, right? What happens? Price drops below that, so we've taken an old low. So what are we then looking for price to react in? A fair value gap, right? Bearish fair value gap. Where are we then expecting that to chase price down to? Back to this low. Yeah. Then when we chase that low, we create this fair value gap, which we tap into here, so on and so forth. Does that make sense, guys? I'm just going to have a little quick look through a couple of questions. I know it just looks like some colourful mess from like a kindergarten or something, but does that make sense? We'll press replay and we're going to have a look at how we would take some of these setups. But, is that making sense to everyone? And then if we're talking in terms of order flow, or market maker models, what we have here is our smart money reversal, accumulation, do these in green, and then what do we have here? Smart money reversal again, smart money reversal, accumulation, smart money reversal, what do we have here? Smart money reversal. I know it's not exactly the cleanest, right? But you would say here that you would have smart money reversal, distribution, right? Typically, you would look at that. You do have that fire back up, but guys, these aren't, unfortunately, ever as clean as they necessarily seem. And then you've got smart money reversal again, attacking the highs. All right. I'm not going to go into that too much. Things like those market maker models, and that is a guy on YouTube. I have no affiliation with him at all, but he's called Zusi. Who covers these models incredibly well. In fact, I'll get some details together for you on the next stream because he's really, really, really good the way he describes those. But do you understand kind of what we're looking for, right? Now, if we're going to decant that onto other time frames, So let's get our replay mode in. I don't know, because we've gone quite far back, I'm not sure exactly how kind it's going to be with that. So quick question here. Oh, sorry, Nick, I missed your question above. On that candle that created the bullish fair value gap, interacted with the first fair value gap but closed below. So would that indicate bearishness? Oh, Christ, mate. Exactly what point are you talking about here, my friend? So on that candle that created the bullish FVG, this one, interacted with the first FVG but then closed below it. I'm sorry, mate. I don't understand that. Can you try and, if I zoom out here, if we say that this is so this one, So this was our inverse fair value gap. Price closed above it, so we're immediately bullish here anyway. But we've also taken this high, which means that we need to see how price reacts here. It then draws up into this bearish fair value gap, which is fine. We can expect a reaction there because we haven't yet confirmed the market structure shift. But we're looking then when this fair value gap here is created for price to draw into it. When it attacks it here, we then expect it to attack this high. Then continues up. When it rejects here and drops deeper, we're still bullish. We would need to see price close below this, for us to kind of change bias here. Joel B, I've lost faith in Bitcoin. No utility except to hold it until it increases in value, then sell. I guess I don't get it. No, look, some people are in it for the technology, mate. Other people are in it for the charts. I mean, we're doing this on, an FX pair, Aussie dollar, New Zealand dollar. Believe me, I understand the frustrations of trading. I really do. It's one of those things, like a lot of things in life, that you just feel like you're working endlessly at until it kind of clicks. But something I'd advise, or advice I'd give anyone, which was what was given to me, is find what you enjoy about trading. Find the areas that really speak to you, that you find that you do understand, um, and then use that to your advantage, right? So if you don't understand utilities of Bitcoin, maybe it just you don't have that much interest in the technology aspect of it, which is fine. You can just trade it. But then understanding markets, market dynamics, cycles, that brilliant Almanac article that Burb did recently looking at probability cycles and, profitability cycles, and when, it's most likely for Bitcoin to perform well or when it's most likely for stocks to perform well, is a really, really good way of kind of finding your niche and then really kind of dive into that, buddy. So, Nick, yeah, let me know if it's that. So this one here, okay, blah, 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 and then with that, so if FEG interacted with the first FEG but closed below, I don't know what FEG you mean it closed below, mate. I don't. So this one closes above, price comes into. If it had closed below, then yeah, we would look to attack those lows. No. Well, keep coming with the questions, mate. In fact, I think what I should do. So basically, this is unfortunately, guys. Well, I say unfortunately, you can probably all do with the rest from my ramblings, actually. But this is going to be my last show for a couple of weeks because I'm off to Jamaica for my friend's wedding. I got the honour of being best man over there, so we're going to go over there for a couple of weeks and just kind of, it's been a long couple of years. I think I've had like 2.5 weeks off in November. It'll be 2 years, and they're just only in little spells and patches. So hopefully that's going to be the catalyst to just get a bit of relaxing in, fresh BC to come back and smash it with you all. But one thing I was thinking of doing is coming back and trying to facilitate a live show where I can get some of you guys on as speakers, so I can kind of give the mic to someone and say, okay, Nick, you've got a few questions. Let's get the chart up. You can direct me when I'm on the chart, and then we can ask, because I think that's really how we can take that to an interactive next level. Joel, okay, good. I prefer XRP and XLM. I did pass on buying 4-bit and 2. I regret it. Mate, the good thing is there'll always be other chances. What you've got to say to yourself is, okay, how could I have spotted Bitcoin? Yeah. Like, you clearly got a bit of an interest in it. The XRP, the whole Ripple thing, the lawsuit. But what I would say is just understand that side of it, and actually fundamental analysis can be a really, really powerful tool, understanding when these things are going to move. And I'd always recommend, Milky, Julian, people we work with, fantastic with that. And if charts speak to you, then you don't really need to know what the asset is. You can strip all that off and just focus on the price action. I'm going to miss you too, Kelly. I'm really going to miss you guys. It's going to be and Erica, all of you. It's going to be really difficult for me, actually, because I really struggle for downtime. But I think it's something my body's telling me that I kind of need. And ultimately, I want to be the best version of myself, for my family, for you guys, for everyone. I'm desperately going to miss you guys, and it's going to be really hard not to actually just get this out and start doing it. But yeah, exactly. Flood the chat, guys. Questions, more questions. Hopefully, we get around to them. Exactly, and they act as a study tool for people, and you guys can tell me where I'm messing up or areas that you want to see more of. But just kind of going back to this, and where we've got our confirmation set up, we're going to take a quick look at this, right? Does this make enough sense to people? Yeah, we're going to start by looking at it down here, first of all. And I think it's going to really struggle to let us in with any really kind of long-term data. Let's see if we can do the hourly. Okay, I'm really glad that that's worked. Okay, now, obviously we would look to trade this on a lower time frame typically, but let's look at it on an hourly. The reason I don't want to push it too much more is I think it's just going to crap out on us. Thank you, buddy. Oh, night shift worker. What a legend, mate. Do you know what? I worked night shifts, a couple of different jobs and that while I was going for it. Just for anybody out there that's doing that. And don't think that you won't work your absolute... I've never worked harder than since I've been in this industry. Whatever your dream is, just keep following it and know that all these grinding shifts, all the stuff you're doing, these hours that you're staying up late at night to better yourself, that's what makes the difference in the world. Yeah, and will absolutely make all the difference to your future. Outwork everyone and never be the smartest person in the room. Good luck to you, brother, and it was really, really good to have you on the show, Joel. Hope to see you again in the future. So, here, ready, Nick? Remember, Nick? Confirmation setup. What do I mean by that? Well, let's look at what we need, yeah? And this is where we're going to get into our lovely lovely intermediate term highs and lows, which I believe was for our wonderful Kelly. Yeah, so confirmation setup. Here we are. Why have I written confirmation setup? Because we still don't know if we're going to close above this yet. It's purely a target until we get our triggers, right? So price is drawn up. Remember this nice salmon-y box, yeah, is our daily fair value gap where we're expecting a rejection of price, yeah? If we don't get a rejection of price, we're not just going to trade it. We wait for confirmation, right? So this is where I want to bring in intermediate term highs and lows. I'm just going to get rid of this for a second so that I can show you a few things. Now, because we're on the hourly, people that will know how I trade, I very much respect kill zones, right? They're specific times as highlighted by SCT test, historical test data, for which we're most likely to get the type of setups that I trade on low time frames. However, they're very low time frames. And so if you're doing them on an hourly, you wouldn't really have the same thing. So what we're looking here is more like a swing trading setup, okay? But it all amounts to the same, right? So, so completely sinks in and can just spot them like that. Or you will do, mate. You absolutely will do. And I'll show you a few other things you can do as well that can help. But this is a really important point that you raised here, Kelly. So if we said to ourselves, to enter a trade, we require a couple of things. And let's write these down. So we require, trade entry. It's a little bit smaller. Oh no, I leave it bigger so you guys can see it. So trade entry, right? This is the only things we're going to ask for. Number one is a sweep. Yeah. Hey, burned. Getting in just in time for the meat on the bones, my friend. Yeah. So one we're going to need is a sweep. So we're engaging with our high time frame array. Yeah. So that's a given. But actually, no, it's not a given. Let's actually not make that a given. So engage with high time frame array. Yeah, which can be FEG, OB, etc. Yeah. Then we need to see a sweep. Why do we need to see a sweep? Well, this is to tell us that price has engaged the stops. Yeah. So in this case, yeah, we've engaged the buy stops and we're looking to go lower. Then we need to see an intermediate term high or an intermediate term low broken. Yeah. And then what we want to see, we then need a trigger mechanism to get involved in the trade. Yeah. So either a return to an order block, yeah, or we're just going to call it a PD entry. Normally, I would always favor a fair value gap or a breaker type setup, but on these hourly type charts, it can often be difficult to get that. So we're going to leave that, right? So let's run through this quickly, yeah? What have we got here? We're engaging with a PD array, yeah? So that's a tick. What do we then need? We then need a sweep, yeah? So we want to go short here, right? There's our sweep of the high. See that little poke above there? Perfect. Now, if we're looking for an intermediate term low or an intermediate term high, an intermediate term low or high is one that is rebalancing a fair value gap. So we need, this is a little bit counterintuitive because you look in the other. So this low here, yeah, that's not an intermediate term low. See, no fair value gap to the left, right? So then we say, okay, what about this low? Ha! See how that's running through a fair value gap? That is an intermediate term low. And by the teachings of ICT, this low should not be broken if we're expecting higher prices, right? So we draw that across here. And this is our ITH, yeah? Our intermediate term high. I'm just going to make that a bit thicker so you guys can see it clearly, yeah? So see how we close below it here? We can even use that as an entry, right? But ultimately, remember what we've said. We said to ourselves, right, we want to see price close below here. So it's taken out our intermediate term, ITH. Get more sleep, BC. That's the key. Intermediate term low, right? So close below it. We can either use a retest of this, right? Or as long as you haven't taken out your internal liquidity, that's our internal liquidity. Why? Because our external liquidity is the start of the move down here or here, yeah? Or this actually because of that epic wick. So this is internal, yeah? Because if that's the bottom and that's the top, this is inside. Now, why is this important? Because I'm a seller here in this bearish fair value gap, and I'm also a seller here in this bearish order block. Remember, all we're doing is we're just decanting down from the high time frames onto this one, right? But my concern would be if this move had run lower and had taken out this internal liquidity, this is a much more low probability setup. It goes from being an A setup to a B setup or even a C. Because if we're wrong, price comes down and bounces off here, it could easily recover, inverse this fair value gap, yeah, and then move higher. But what we're doing is we're sticking with our bias, yeah? We've got our fair value gap here, we've got our order block here. So what we would then do is then drop to a lower time frame still, and in here, doing what we're doing here. Yeah? So see how we've dropped from a daily to an hourly to get this? Well, then when we engage with this, we would drop from an hourly, say, to a 5 minute or a 15 minute. And all we would do is look for this same setup within that. Does that make sense? Yeah? So let's look at it again. Right? What did we have here? So inverse fair value gap here, right? So what are we looking for? See, we got our green line. That green arrow, represented when we were on the daily, the close of the daily candle, right? Why is that so important? Let's just move this up here. So what have we got here? We're engaging with a higher time frame array, yeah? This is our high time frame fair value gap. Does everybody get that, yeah? So here, no trades today, right? Thursday, no trades. We're not engaging with the high time frame array, right? So we have to be patient, and that will kill most people, right? So I know it still kills me today. I'm not a patient person. But you have to control yourselves with rules and mechanisms, right? So what did we say on the one before? Do we have a sweep? Let me just get rid of this. We absolutely have a sweep, yeah? See that? So we've swept that low. Beautiful, right? Now, do we have an intermediate term high, right? We have a high here, which is clear as day, but it's not rebalancing a fair value gap. However, what is it rebalancing? Yeah? Could be this order block, couldn't it? Could be this order block. So you need to decide when you're looking through this, what are you making the allowance for, right? Because for me, if I want to see it rebalance a fair value gap, a high that's within a fair value gap, well, exactly right, Erica, it is an order block. But you need to study that, yeah, and see if that makes sense to you. Can it be an order block or does it have to be an FVG? Now, I believe in ICT's original text, well, a long time ago, actually, but the ET talks about it being an array, yeah? I do very much favour fair value gaps, right? So for me here, I wouldn't really be making this allowance, yeah? Or on certain assets I would, certain assets I won't, but I don't want this to be confusing for you. It's all about how you build your data sets, and that's why it's important to focus on a restricted amount of pairs, yeah? So here, this doesn't count. Even though we can see it would have been a beautiful trade. Displacement, what happens? Price comes down into this order block. Remember, we took the order block trade on the last one, so we want to be consistent, yeah? Boom. Entry stops targeting this high. Gorgeous trade, right? But it's not valid. We have to follow a set of rules. And when you're back testing, you will kill yourselves. That's a terrible thing to say, as in you will wind yourselves up if you're not consistent, because then when you try and do it with consistent data. But don't worry. This is an intermediate term high, right? Yeah? This through a fair value gap. So when we break it here, yeah, all we're saying to ourselves is, well, if we're shooting for this high, yeah, do we re-engage with this fair value gap or this order block before we go higher? We don't, because we've already taken it out before we come back. But does that invalidate the fact that we're bullish? No. Look, higher time frame array, we're bullish. We're still looking for bullish setups. So as we step into here, yeah, Monday, which is a shorter trading day, all we're doing is we're saying, okay, well, where would we be looking for? So what's our rules, guys? Let me just make that as ITH. Remember our previous set of rules? Price is either reaching for liquidity above an old high or below an old low. Yeah? Or a fair value gap, right? But if we're looking for continuation, we don't want to trick ourselves. We want to bring in our premium and discount, right? Where's our first FVG here? There, right? And we do that in bright green to show it we mean business. Get rid of our premium discount range now. So as we step into trading here, what are we looking for? Price has come up, taken this high. What do we want to see for continuation? We want to see this hold. What else gives us a bit of conviction that this is going to hold? Our order block. So can you see how these are just kind of sandwiching to make this beautiful support pad, yeah? And then what we would do is, again, decant this onto a lower time frame here. And once again, in here, yeah, we look for a low time frame confirmation setup. Does that make sense? What happens here, right? Now, this is again where other ICT students may differ. This is a really lovely clean setup. We've got our daily order block here, but this is forming at the moment. So at the moment, we need to ignore that, yeah? We can leave it on the chart because we can show how we can get moves off of this here. So, or in fact, we won't, because I won't just keep going over this, right? I'll give you this one last example. Burned when intermediate term high low. Yeah, absolutely. Maybe that's my kind of parting gift to the market, right? So, what are we doing? Where's our checklist? Here. Right, so we're here now. Why are we not trading here? Price isn't engaging with the high time frame array, is it? Here's our bullish order block, right? See, we've got our arrow again. So this is where we're looking to go bullish, right? This is what we drew on the daily. What are we looking for here? And I'm going to bring everything together here, guys, right? We've got a beautiful clean target up here, right? That's the absolute dream scenario. Here's our first intermediate term high from up here, yeah? I'm talking about when we engage here. But our actual intermediate term high, see this fair value gap here? I allow this wick. Now, ICT might not, right? I don't want to argue with purists and bits and pieces. For me, it counts because the body hasn't closed above it. So this is clearly still rebalancing a fair value gap. So that is our intermediate term high. What else gives me a bit more conviction here? Remember, because I'm bullish here. My higher time frame just tells me I'm bullish. Brilliant. I don't need to argue with that. I don't need to be looking for shorts. Just need to follow our list, right? Engage with a high time frame array. That's this green box, yeah? It's a fair value gap. Do we have a sweep, right? Has price come down? Has it swept to low? Right, we should say really if we've got a sweep or a raid, because a sweep doesn't have to be a sweep. What I consider a sweep is an immediate low. So see, like with this here, I'd call that a sweep. Taking out this liquidity here from a prior day, I'd consider a raid, yeah? So let me just add to that as well. Basically, we have to see in this case, yeah, that the sell stops have been engaged. Yeah, bang. Sell orders engaged, meaning that buyers can step in larger numbers. Then we need to highlight our intermediate term high, which is here, right? Then we just need to see that broken, right? Then we can either enter onto the order block, which is what we did last time. So we got these candles here, 2 consecutive down candles. What happens? We break above with displacement. Our entry goes here. We buyers here. Stops below the price swing low. I always put a few points below it there as well, right? Now, I'm going to be monitoring price when it gets to this high, right? So if you want, you can always tuck your stop losses underneath the order block. For me, I like to just be a little bit more cautious. Ultimately, I'm going up to here, right? If I have any reason to think that this trade is going to fail, then when I get to here, I can just move my stops to entry because price really shouldn't be coming back in here. And if it does, price did something like this and comes back down again and gives us another opportunity to get in, then we just simply get in again. Not really that worried about getting stopped out of break even. Yeah, price could come and take my stop loss, right? Come back here and then it could moon, but plenty of other times it won't. But again, just make sure you're in with the test data. But does this make sense? Here's another intermediate term high. So we're saying to ourselves, right, if price is going to reverse anywhere, it's probably here because we've created this afterwards. This provides our trigger mechanism. We can get in on this fair value gap. We can get in on this order block. Yeah. And then we're simply looking to chase down the next clear and obvious liquidity. All right. Awesome. So just remember when you're talking about intermediate term highs and lows, you're just looking for highs and lows that are rebalancing fair value gaps. I would look into ICT's teaching of this, obviously as being the originator of it, so really the godfather. But really, when you're looking at these highs and lows, are they rebalancing fair value gaps? Yes. Gives you a little help in terms of looking at ways that these can be a little bit more productive. Now, the one last thing I just want to share with you guys really quickly, which is the conversation I had with a really awesome little ICT trader. Little, I don't mean that in any kind of derogative way, just because he's a really young guy, super bright. I'm really just bantering around with this. The inverse setup. So talking about and kind of communicating how powerful these inverse fair value gaps are, right, and what they can tell you about price. So just out of just almost like a social experiment, what I would say is if you get the opportunity to do it, you see all the little arrows on my chart where we've been running the test data. Now, have a play around with this. So there's an indicator you can get called called Asia range, I think it's called. Asia session range, right? Now, you can put these on to dictate any time zones you want, but for me, they overlay these trading hours, or they certainly did before it's had a little bit of a wonk. But basically, you just need to align them so that they set up over your boxes. Hasta la vista, Barbie. Hey, buddy. I'm really sorry, mate. We're just coming to the end of the stream, but hopefully it'll be something worth watching back. Now, all I want to say is this, just very quickly. Trading like this can happen on any kind of time frame, right? At the daily, we're looking for key daily highs and lows, weekly highs and lows, etc. Now, what we also have, are session highs and lows. So we have previous day high and low, which I'm going to put on using this indicator. And then we have our sessions. So London, Asia's before London. So basically, this is Asia's high. Yeah. I'm on a 5-minute chart. What am I looking for? We need to take a key high. Right, we can see here, taking the Asia session high. What am I then looking for? Inverse fair value gap. Yeah, I'm then looking for price to break below the inverse fair value gap, right? Leaving a fair value gap of its own, which becomes an entry. We enter on the retest of it. A stop loss goes above the price swing high, which I believe is this one here. Always a few points. And then we simply target the clear and obvious liquidity below the price session's low, right? Give you another example. 2 on this one, right? Look, we ran Asia's session high, which was here. Obviously within a kill zone as well. London kill zone, what happens? Inverse fair value gap, close below, return to our PD array here, sell off, targeting that first of all, but ultimately this consolidation here, right? Then we have another one here. So we see this. What are we engaged with here? This blue line is the prior day's low. Here's our bearish fair value gap that gets inversed here. We create a little, let's move that out of the way. We create a little fair value gap, bullish fair value gap over it. Price tabs into it. We take it up to the next point of liquidity, right? Now, I'm not saying make this your trading system, but what I am saying is it can be a really, really good way of getting used to your, ICT kill zones and pivots. TFO is a nice indicator for sessions. You're right. But all I'm saying here is this can be a really, really fun way. Super order blocks by Makachuku is really good as well. FEG's order blocks, break of structure. There's another one, fractal imbalances or something as well that's quite good. Just until you get your eyes in, but you'll just start seeing these all the time, right? Like here, run the prior day's high. Do we have an inverse fair value gap here? No, we don't, but we get one here. Which is bullish. Bullish FEG, closed below here, meaning an inverse. What do? We leave this fair value gap in here, which we tag into here just at the end of the session, ultimately sell off. The reason this doesn't overlay that is because I've been testing this on a 1 minute as well, but I would say the 5 minutes are a lot better. But the reason I would use that is because it really, really helps you understand session liquidity, right? So when Asia's been trading through here, and then we get into London, which is here. If we extract this forward, see how we get a breakout, retest, price moves higher, right? What we're actually looking for is a deviation, so for price to run the highs and then come back down towards the lows, right? So we would do the same here with London. So here's our London high, but we've expanded beyond that by the time we get into New York, yeah? But what we absolutely do have is the high of day, which is this. First high of day is here. Do we get a reversal? No, we don't. Next high of day is here. Do we get a reversal? Yes, we do. So what do? We step into the charts. We look for our bullish fair value gap to be violated with a bearish candle, and then we look to trade from that 5-minute FVG. Now, the reason I just brought that up is just kind of get yourself in there. He sees it like Neo sees the Matrix. You try throwing some bipolar and some OCD into that as well, Burned. And yeah, that's pretty much my life, is just seeing random stuff. But give it a go. Session liquidity is really important to understand liquidity and to trade on lower time frames, all right? Now, hopefully this hasn't been too convoluted. I know, hopefully we cover PD arrays, intermediate term highs and lows. So do remember those. Even when you're looking on a little chart like this, you will just start to spot them, right? So here, for example, right? Draw it left. See how we're going through that fair value gap? Look what happens when we draw it to the right. It is unbelievable. Look, close below, retest. We're short here. Look how it retests it just to the dollar. These intermediate term lows and highs and lows are really, really key. Really, really key. So get in, get your head in the data, get yourself onto YouTube, or look up ICT. Do drop me a message if you can't find. I'll recommend you some videos on that as well. And then, yeah, I'm really going to miss you guys. Thank you so much. Had some really lovely messages from you all saying have a great time in Jamaica and that. It's going to be it's really weird, right? You know, I'm really looking forward to the break and stuff like that. But I have not in the last, I don't know, how old am I now? In the last 20 years, I've never really had an extended kind of break or holiday, do a lot of working holidays, a lot of adventure holidays. This is going to be a real wind down one. So I'll let you know how it goes. I'm taking my laptop just in case I do get too bored. So you never know, might throw in just a really random little live stream from a beach in Jamaica with you all. So in fact, I might do that. I'll give you guys plenty of notice, all right? But before I go, I just want to say a really, really big thank you to you all. I really try not to forget anyone. A lovely Kelly Bark all the way from New Zealand, Erica H, always on the streams, GOT, brilliant. See our friend Craigie Boy, who is unfortunately been dragged back to work, learning, brilliant. See you on that. Thomas, thank you very much for joining today. Really, really good to meet you. I know we had loads of other people dropping as well. Obviously, our wonderful Nit Par. Can never forget that. Yosef as well. Whack, it was brilliant to see you on there. Yakuza Kana, who came in as well. Piskit as well. Again, some of these really, really cool names are really becoming stalwarts to this show. And I know we've got, dozens and dozens of other people in the background. Please don't be afraid to speak up. I know it can be intimidating something. Really appreciate your input today as well, Joel. Great to have you on the stream, and hopefully interesting enough for you to come back at a later point as well. Obviously, our lovely and wonderful Burn came in late, as did Hasta La Vista Barbie. And I actually think they were the latest enjoyers. So thank you very much for your well wishes. Trade safe. Remember, we are a fairly news-driven week again this week. But just remember, just find something that speaks to you. When it does, just really test the living daylights out of it. Yeah, get as much data as you can, going back as far as you can, and it will really, really take you a long way. And remember, if you're interested in the Nest at all, you can find some amazing deals, offers, and everything down in the description. And yeah, just have a fantastic week ahead. Going to miss you all, but like I say, I'll probably be tempted to do a little cheeky live stream at some point, so I'll give you loads of notice. Have an amazing week, trade safe, and I'll see you legends in a couple of weeks.